Danielle Brazil Hudson. Thank you for holding. We're going to go ahead and get started. At Allyn International, I am joined by our speakers and two of our licensed customs brokers, Michael Cater and Dan Hernandez. And I speak on behalf of the group when I say I'm so excited that all of you were able to attend our webinar today. At Allyn International, we provide customizable, customer-centric services in three core areas: logistics and transportation management, tax management, and global trade compliance. This afternoon's presentation will be focusing in on global trade compliance and more specifically on the essentials of importation. Michael and Dan will delve into the timeframes, definitions, and vital requirements needed to import goods into the United States. We hope to impart practical knowledge and tips to help you to minimize avoidable mistakes. The pro tips that we have identified were crafted from our 25 years of trade compliance consulting experience and were designed to communicate industry best practices. Best of all, our pro tips, if incorporated into your trade compliance regime, will assist in eliminating the common mistakes that cause shipments to be delayed and increase costs. As we will be covering quite a bit of material in this presentation, we want to encourage our audience to type in questions that they would like answers to. At the end of the presentation, we will have time to answer some of these questions and commit to answering via email any questions that we were not able to cover. So with that, I'm going to hand the mic over to Michael and Dan.
Hey everybody, this is Dan. Sorry, we appear to be having some technical difficulties. The audio's not coming through where it's supposed to. So give us just 1 second, please. We're trying to fix that.
All right, so to go over what we're going to be talking about today, I'm going to start with the table of contents for you guys. We're going to start with covering the concepts of informed compliance, the Reformation Act, and So we're going to start with the import basics. We're going to cover the key players, customs bonds, the entry cycle. Then we're going to move on to 7501 and proper invoicing. We're going to cover commercial documents, descriptions, valuations, country of origin, and harmonized tariff codes. So to begin with, we have to explain the concepts of informed compliance. Due to a couple pieces of reform legislation introduced in the 20th century, the United States is now what we call an informed compliance country. This is a change up to the classic enforced compliance system, where customs goes through each individual shipment to enforce duty and best practices. The informed compliance system does away with this idea and asks that the importer take reasonable care to ensure that they are meeting all governmental requirements. In exchange, customs does less direct monitoring and regularly publishes documentation explaining how to import compliantly. Additionally, customs expects importers to regularly audit both their data and their processes for gaps and errors. The importer is then encouraged to report any violations or errors they find. In exchange, customs will mitigate or completely remove levied fines and penalties. They want the money or paperwork they're owed, and having punishments in place for trying to fix errors does not incentivize people to self-report. The general idea here is that customs wants a positive quid pro quo relationship with importers. You do some self-policing, and we will help you understand the laws. We don't have to manually look at every item imported, and you don't have to wait for us to do it. I think it's important to note that while the U.S. is not the only informed compliance country, it's actually pretty common now, there are still plenty of countries that require inspection on every shipment in order to manually assign duty and enforce regulations. So now that we have that out of the way, what exactly is an import? Put simply, an import occurs anytime goods cross a border into a country. The most obvious example is when goods are purchased abroad and moved internationally, but this is not the only time you need to file an import. Import is also required for samples shipped from foreign countries, return products or products moved for warranty fulfillment, even products that you already own, such as workmen's tools and equipment or tooling on loan abroad.
So, Michael, it's pretty important to note, in my opinion, that a lot of these less obvious imports are going to have special provisions attached to them, such as a Chapter 98 provision for U.S. goods returned.
That's 100% right, Dan. And there's a lot of different provisions like that, things that wouldn't be immediately obvious have special provisions in Chapter 98 attached. So who's impacted? One would think that importing should be a relatively straightforward process, but the reality is that properly declaring to customs can require input from almost every part of your business. Logistics is the first department that you would think customs needs to work hand in hand with. Without logistics setting up shipments, there is no need for customs clearance in the first place. Properly created logistics paperwork is critical to timely release. Sloppy piece counts and incorrect weights can lead to census warnings and confusion with your broker. Mismanaged handoffs or late pre-alerts can lead to even worse consequences, with your broker starting clearance late or not starting it at all. Next, we have purchasing and finance. They are integral to providing the proper value of the products being moved. Purchasing is responsible for listing the price that was paid for the goods, usually called the price paid or payable. This is one of the most important elements on an invoice, and misdeclaring can lead to huge discrepancies in duty paid. However, if there was no sale, for example, in an intercompany transfer, the finance team will be consulted to determine the value with GAAP, or generally accepted accounting principles. It's important to note that this is not common, and the price paid will be used whenever possible. Now, this next section is where things start to become a little less obvious. Legal, R&D, EHS, and tax are all departments that I work with on a regular basis, and none of them are immediately obvious when thinking about international shipping. However, customs will sometimes want to know an uncomfortably large amount about what you are shipping, and each of these departments has one thing in common. They are experts in what they do. These are the departments that can answer the questions that your broker just doesn't have the expertise to respond to. For example, when importing a valve, you often need to know its pressure rating. If not listed on the invoice, R&D will have to be brought in to answer this. Similarly, when importing an engine, you have to report the EPA tier it falls under. Again, if this is not listed, we have to look internally for answers, and the EHS department will be the place to go. Now, working off the previous example, let's say that your broker tells you that your engine tier is not correct, or that you would not qualify for something like the Tier 3 grace period exemption. You will most likely have to consult with some sort of legal counsel, either internal or external. To further complicate things, duty is considered a form of import tax, and the answers to all of the questions above could have significant tax implications. For example, the EPA could allot tax credits when importing engines with lower emissions than the minimum requirement. It's crucial that the tax department is kept apprised of issues like this because it could affect things other than whether or not your freight clears on time. Now, this is by no means an exhaustive list. In fact, we could very easily double this list simply by mirroring these departments within the company you're purchasing from. It takes two entities to make an international transaction, and if the departments within your company cannot answer questions of the kind I previously raised, then you may have to go back to the exporter or the original manufacturer to get the answers you need. So the previous slide covered the supplemental parties to an import. For this next slide, we're going to cover the 5 essential parties that are key to the process. Going in somewhat chronological order of their integration into the process, we have the exporter. This is the foreign party where the goods originate from. They package and prep the goods for international transport. The freight forwarder. Freight forwarders consolidate freight, making them primarily responsible for arranging and coordinating transportation with the carriers. The carrier. Carriers are the ones that handle the physical transportation of the goods. Finally, we have the importer and the customs broker. Now, these are the 2 most relevant parties to this particular presentation, and we will go into more detail as we move through the slides. But for now, we can explain them as such. The importer is the buyer or consignee of the freight. They are responsible for all import processes and requirements. The customs broker is a third party that's hired to help them with these processes. They transmit the import filing to customs, and they work with the importer to make sure processes are compliant and requirements are met.
So, Michael, before you started this slide, you said that they're somewhat chronological. And I just wanted to point out that each party is going to have involvement at most stages of the shipment, and each step of the shipment relies on the other parties having properly done their part in the previous steps.
That's completely right, Dan. I mean, you could have, depending on how your incoterms are set up and depending on how your contracts are signed, you could even have the exporter acting as the importer, assuming they're properly set up. Absolutely. So this isn't really like a strict rule. It's just sort of a general guideline of how things normally go.
Absolutely.
So now we're going to go into more detail on the 2 most important parties mentioned in our previous slide. First, and most importantly, we have the importer of record, often shortened to IOR. The importer is the party ultimately responsible for making sure all the laws and regulations are followed when filing an import. They're responsible for all duties and taxes. They're obligated to return merchandise to customs, normally so that it can be inspected or detained. They're also held liable for making sure all PGA requirements are met. Now, to expand on this one slightly, PGA in this context is not the Professional Golfers Association. It's an acronym Customs uses that stands for Partner Government Agencies. It is a shorthanded way of referring to the multitude of government agencies, other than CBP, that have regulatory power and can set import requirements. Some examples include the FDA, the EPA, and the FCC. The government's pretty fond of their 3-letter acronyms. And finally, they are also expected to keep records proving that all of the above were handled properly when customs comes asking. As you can imagine, this can be quite a bit to handle for most importers, so they usually choose to employ the services of our next key party, the customs broker. So, as we said previously, the customs broker is an agent hired by the IOR to manage the import process on their behalf. They handle everything that is needed to legally import freight. They classify merchandise, they prepare customs documents, they check for PGA requirements, remember all those 3-letter acronyms? And most importantly, they transmit all of the finalized documentation to customs to secure a shipment release. It's important to note that while the customs broker is the first line of defense against noncompliance, the liability of correctly declaring information to CBP rests entirely with the importer of record. The policy of informed compliance and shared responsibility that we talked about earlier puts the onus of responsibility entirely on the IOR. They're responsible for auditing and managing both internal processes as well as their broker, to make sure compliant practices are in place. Using the excuse, "Sorry, customs, I didn't know my broker was doing that," is not acceptable.
Wait, so do you need a customs broker, or is it legal to import on your own?
Well, technically you can do it yourself, and I've known clients that have. However, it's kind of like trying to represent yourself in court. While you theoretically can do it, and you aren't legally required to hire an attorney, it's probably not a very good idea. Quite a lot of the clients I've been brought in to consult with attempted to manage their customs without the help of a professional and ended up finding themselves in hot water, eventually leading to them coming to us to clean up the mess. Moving on, our next slide is customs bonds. As much as customs wants to trust importers, the government is not in the habit of trusting blindly. To make sure that all of an importer's obligations are met, an importer must have a valid customs bond in place before they can import. Just like any other bond, a customs bond is the formalized process of bringing in a neutral third party to ensure that an agreement is kept between the two principal parties. So, to put that plainly, let's say that I'm an importer. Customs wants to make sure that I pay all of my duties and taxes. And if later they find out that I messed up, they want to know I'll be good for the fines and penalties I owe. So they get Dan involved.
Hi.
Hi, Dan. Dan acts as what they call the surety in this exchange. He makes sure that I keep up my end of the bargain. In exchange, he takes a small payment called a premium. This can be a one-time premium paid for one single import, or the bond can be what they call continuous. With a continuous bond, the premium is paid in advance for an entire year, and the bond is continuously active for that entire time. But what exactly do bonds guarantee? Customs bonds represent an agreement to make complete entry, which covers all the following: paying your duties and taxes, producing documents, redelivering freight at the command of customs, normally for examination or seizure, and honestly, they more or less require you to fix any form of non-compliance you may have committed. So, now that we've defined an import and covered the key players involved in the transaction, let's move along to the actual import process. Once your freight arrives in the U.S., CBP gives you 15 calendar days to submit an entry. Once your broker submits an entry, CBP allows you 10 calendar days to submit an entry summary, which is used to assess duty amounts, collect statistics, and satisfy other legal requirements. Failure to file the entry summary after the 10-day window will result in fines. Failure to act within the initial 15-day window will result in your goods going into CBP's general order warehouse, often shortened to GO. In GO, your goods sits in a customs bonded warehouse and accrue storage fees daily. Trust me, this is not where you want it to get to. I really can't tell you how many times I've been brought in to try to fix these shipments with companies that did not collect the proper customs information beforehand. I had one shipment valued at over $100,000 and it was held up by a wire. One single wire that we were missing information on. We were brought in after the shipment was already moved to GO, and at that time the shipment is bonded, so you can't manipulate it without special customs approval. This meant that we could not segregate it and that we had to get the wire released to get the rest of the cargo released. Unfortunately, we needed the chemical composition of the wire from a mill certificate, and the company that had made it was no longer in business, which put us in a pretty terrible no-win condition. Situations like these are why it's really critical to make sure you have everything you need before freight starts moving. 10 days may seem like a long time to gather what you need, but with time zones and inconsistent lines of communication, it can seem like no time at all. So, at this point, I want to take a break to give our first presentation pro tip. Now, in my previous story, the shipment was held up for some technical information. This is a very common cause for delay, but will usually get resolved before the shipment goes into GO. However, there's one extremely common issue that I find very frequently ends up landing shipments in general order warehouse, and that is unclear or poorly planned incoterms. When a buyer is setting incoterms for a shipment, it's crucial that they understand that each party to the transaction is capable of. For example, if a purchase is made DDP, the seller is responsible for importation. You have to make sure that they have the ability to file for import. A foreign entity cannot import something into the U.S. unless they are, 1, set up as a non-resident importer, 2, they have an active bond set up with a surety, and 3, they have either a broker or the internal expertise to file an entry with customs. You do not want to find out they cannot fulfill this role once the goods arrive in port. Then you're stuck figuring out what the problem is and why the goods aren't moving. And to make matters worse, once you finally get that sorted, you have to try to renegotiate the terms of sale while the days are passing and the storage is collecting. Similarly, you want to make sure the importer of record is clear in the commercial documents and that you are able to be the importer of record. Remember, the invoice must reflect the international transaction taking place, and the importer of record must be shown to have a vested interest or financial stake in this transaction. You cannot import something that you do not have any claim to. So, backtracking slightly to my previous story, the goods were eventually seized by customs because the port director would not grant us permission to segregate the wire from the rest of the freight. However, this is a very extreme situation and not the only risk that can occur from non-compliance. Other risks include delays, seizures, audits, investigations, liquidated damages, and best of all, loss of import privileges. That's right. Remember before when we explained that informed compliance was a sort of informal quid pro quo agreement? Customs is not afraid to take away the benefit of the doubt and either check all of your shipments or just tell you that you cannot import anymore. Again, these are the things that can happen when you don't take the necessary steps before moving the cargo. Although some goods can have a lot of very specific requirements to import, many shipments only require the proper elements filled out on your commercial invoice. For example, listing weight for steel products or meters squared for textile goods. With very little effort, you can put a process in place to make sure the required information is included on your invoice. But even so, we see the same simple mistakes hold up shipments and lose importers money. So at this point, I'm going to hand over the presentation to Dan so that he can go over the 7501, the document that we've been calling the entry summary, and some of the information we commonly see missing from documents, leaving your broker unable to complete the customs entry and leaving your product stuck in storage.
Thanks, Michael. So your goods have arrived to the U.S., they're in the port, your broker's working on it. What now? You, as the importer, are responsible for providing CBP with certain information in order to obtain a release of your goods. Your broker will prepare and submit a CBP Form 7501, the form you see on the screen right now, on your behalf, complete with all the required data relevant to your entry. So what I'm going to do now is review the documentation involved with importation, and I'm going to share with you the most frequent errors we see and deal with, and how to avoid delays, potential penalties, and how to stay off of customs radar. To start, there are 4 essential shipping documents or communications that are critical, as knowing how they're used and what information your broker extracts from them can help you prevent your shipment from being put on hold. In the event any of the required information is missing, your broker will be required to put the clearance on hold until the information is found or provided to them. The arrival notice is a communication sent by the carrier to the consignee or the IOR or the broker, or all 3, as an alert regarding the arrival of the shipment. Included in the notice are details like description, weight, quantity, and charges for the shipment. While the notice allows the goods to be picked up and the broker to file entry, it's not a release document. The airway bill or bill of lading is a transport document issued by the carrier to acknowledge receipt of the cargo. It serves as a contract of carriage between the shipper and the carrier. The packing list accompanies the commercial invoice and provides detail on how the shipment is packaged. This includes weights and dimensions, how the items or groups are packaged, the contents of each package. And this allows customs authorities to easily and quickly identify where an item is in the shipment in case they want to inspect it. And lastly, the commercial invoice, which is the most important document in the shipping packet, as it contains the majority of the data elements required to file entry. So given the importance of the commercial invoice, let's review some of the more common mistakes that we see on that particular document, and we'll also discuss some ways to mitigate the errors and prevent delays. CBP requires a detailed description for every line item on the commercial invoice. Among the most common issues we see are insufficient customs descriptions. Putting adequate customs descriptions on your documents seems like it should be a no-brainer, right? Unfortunately, I can't count the number of times I've seen inadequate descriptions. For example, when importing a laptop, a description like box of equipment is too vague, or HP 2352LX, which is too technical. If you want to avoid questions or inspections at the port, you should strive to properly identify goods on the commercial invoice in a way that makes it easy for CBP to match your goods to their HTS. A good example for a laptop would be HP Spectre laptop computer.
Yeah, I think it's important to note that you can have technical information listed on there, assuming that you've already got the general description and customs can read it. So for example, you could have something like laptop computer HP Spectre, you know, and the serial number after that, whatever you need to be able to identify your goods.
Absolutely. If you're going to do that, you need to make sure that the entire description shows up so that at no point does that core customs description get cut off.
Yeah, absolutely.
So let's break quickly for our second pro tip. Some products require additional information to be included on the commercial invoice. For example, bearings will also require specific manufacturer information and the physical attributes of the bearings.
Another requirement that we see a lot is textiles. If they're laminated, we need to know if they are laminated and on which side they're laminated.
Absolutely correct. And that's just two of the examples. It's crucial that you as an importer ensure your invoices contain all the necessary information. The next area we see a lot of delays caused is regarding the total entered value. To begin, I'm going to briefly discuss the methods you can use to correctly determine the invoice value. First, we have the primary methods. And these are three methods that are predominantly used in order based off of the value, actual transaction value of the good. First is the actual transaction value, also known as the price paid or payable. The majority of transactions are valued according to this method, and it's literally the agreed upon price between the buyer and the seller. Transaction value of identical. So this is used if the actual transaction value can't be used. You determine the value based on goods from the same country, of the same class or kind of merchandise, goods that are essentially identical. Or you can use the transaction value of similar. These goods also have to come from the same country. They don't have to be commercially interchangeable. They don't have to be identical to the other good. If you can't use any of these options, there are a couple alternatives. These alternatives do not need to be used in order. You would use them however best fits your particular situation. And the first of those is the deductive method. You begin with the U.S. retail price, and you deduct the general and administrative costs, profit, assists, freight and insurance, duty, and packaging. And the other one is the computed method. You start with the cost fabricated component, and you add the general administrative costs, packaging, profits, and assists.
So if you can't use any of these, and you're supposed to use these in order, then you're allowed to use another customs approved method. And we get a lot of confusion on this. You're only allowed to use this if you cannot make sense out of any of the other ones. If you have some sort of weird process that makes either the deductive or the computed method not work, and there was no transaction, so there's no transaction value to use as a basis.
So once you've determined the value of your goods using the appropriate method, you need to ensure that it's included on your documentation. You need to specify the quantity, currency, and value for each line on your invoice. If your broker receives an invoice that's missing this information, your shipment will be delayed while it's obtained. Remember, even if you're importing free samples from somewhere, the invoice value cannot be zero. The goods still have intrinsic value, and customs requires that you declare that on your invoice, regardless of if money is changing hands between you and the shipper.
Wait, so you're saying I still have to pay duty on free stuff then?
That's right, unless you've got another preferential program that you can take advantage of, but we're not going to get ahead of ourselves in this presentation. We've got a couple other mistakes to cover. Quick break for our third pro tip. If you're a related party, don't use the actual transaction value unless you can prove the relationship did not affect the price. So, for example, you can prove that this good has been sold to other non-related parties at the same price. For example, say you manufacture canoes in Canada, and you have been distributing these to different suppliers or customers in the U.S. for a couple of years now, but you've decided to open up a retail store of your own in the U.S. Well, as the importer in the U.S., you're going to have to import those canoes. You have a record having shipped and sold to non-related parties of the value, you can then use that price. Otherwise, you're going to need to use another method. Country of origin is another one of the big mistakes we see, and it's probably the #1 missed item on an invoice in our experience, and it's going to stop your shipment every time. Country of origin is the place where the product is manufactured, produced, or grown, and it can determine whether your shipment is eligible for preferential duty programs. It can affect the rate of duty, and it allows for the management of restrictions like quotas. It's important to note that the country of origin is not necessarily the country of export. You can have a product that was made in Italy but shipped from the UK. The country of origin is going to be Italy. Our fourth pro tip is on country of origin. The country of origin of imported merchandise is normally determined by reference to the last country in which the merchandise was substantially transformed. And that's basically the product undergoes a fundamental change in its form, its appearance, its nature, or its character, which usually results in a new article of commerce, generally with a new name. For example, steel wire is substantially transformed when it's woven into chain link fencing. However, galvanizing the fencing doesn't substantially transform it, remains essentially the same product. A different example is if you source all the ingredients you need to make a chocolate chip cookie from different countries, sugar from Mexico, flour from the US, vanilla from Madagascar, etc. The act of manufacturing the cookies will result in a new good, and the country of origin will be the manufacture country, in this case, wherever the bakery is located. Please note, though, repackaging, diluting with water, and other similar minor processes usually will not cause a substantial transformation. And last but not least, I'm going to discuss the Harmonized Tariff Schedule, or HTS. Every good imported into the United States must be assigned a tariff classification under the HTS, or Harmonized Tariff System, of the United States. The Harmonized Schedule assigns a 6-digit number to a given 10-digit number to a given product description and provides rules for interpreting or classifying products under the system, which is called the General Rules of Interpretation. That 10-digit number is made up of the heading, the subheading, and the statistical suffix. The HTS, or tariff classification of a product, will dictate the applicable rate of duty applied to a product upon the importation into the United States, and it's also a key factor in determining whether or not it's subject to quotas, restraints, embargoes, or other restrictions. A product may also be entitled to special tariff preferences based on the HTS, such as duty-free treatment under the Generalized System of Preferences, or GSP, the North American Free Trade Agreement, or NAFTA, the Dominican Republic, Central America, United States Free Trade Agreement, DR-CAFTA, or any of the other various tariff or preferential programs. Finally, pro tip 5. Maintain a parts list that's vetted regularly and provide that to your broker. This can prevent many delays in the event of missing information because your broker can reference this parts list instead of stopping to research or request that information. So at this point, I'd like to do a quick summary of what Michael and I discussed about some of these import basics. Michael kicked it off with talking about the informed compliance, the Compliance Reformation Act, and what it means to follow informed compliance and reasonable care. We followed that up with some of the basics of imports, what constitutes an import, some of the key players and who's involved, customs bonds, what they are, why you need them, and some of the risks you take as an importer. And then I came in here and closed with some of the shipping and entry documents, things that are involved in the 7501, the commercial invoice, customs descriptions, valuation and country of origin, and lastly, we cover some of the HTS, or Harmonized Tariff Schedule information. The last thing I'm going to talk about here is I just want to do a quick review of the pro tips to make sure they're fresh in everybody's mind, since as far as we're concerned, these are some of the best practices we have to avoid delays and make sure that we're proceeding as best as we can as importers. Pro tip 1, make sure incoterms are used properly and that the stated importer of record is able to make entry. Pro tip 2, Some products we're going to require additional information to be included on the commercial invoice. Pro tip 3, if you're a related party, don't use the actual transaction value unless you can prove the relationship did not affect the price. Pro tip 4, utilize substantial transformation to identify correct country of origin on manufactured goods. And pro tip 5, maintain a parts list that's vetted regularly and provide it to your broker.
Okay. Thank you, Dan. Thank you, Michael. This is Danielle Hudson, everyone, back from listening to this great presentation. I want to thank the audience for bearing with us at the beginning of this presentation with our audio difficulties. I do appreciate it. We appreciate your time. So before I mention any of the housekeeping notes that I have, we're going to go ahead and answer a few questions. So I'm looking at the questions that we have received, and it looks like we have a couple on assists. Dan, you touched on that briefly when we talked about customs valuation. Maybe you can go into that in a little more detail.
Sure. So assists are kind of complicated. I think customs puts 40 pages in the regs towards assists. I might be a little off of that number, but somewhere around there. One simple example of an assist is, say you're an importer and you make garden hoses. You have this long reel of hoses, and you send this to Mexico, where they cut it and attach the fittings. Right? You're only providing them the hoses. You're only going to pay that company in Mexico who's doing this for you to cut them, to attach the fittings, and whatever the cost of the fittings are. However, as far as customs is concerned, you still have to pay for the value of the hose when you import that into the U.S. So you'll have to pay for the value of the hose, even though you provided that to the exporter. You have to pay for the value of the fittings, cutting it, all of that's involved. Basically, anytime you as an importer provide some form of financial assistance to your exporter, which would probably come back to you in the form of not paying for that to that exporter, it's still part of the value of the goods, so customs wants that included.
Okay, so tooling, it sounds like.
Sure.
If you provide tooling,
molds,
artwork that are
drawings,
not designed
engineered information, how to actually build it.
If you provide labor, sometimes they count that.
Absolutely, and all of this goes into calculating the assists value, which is really part of the valuation, which is where you definitely want to bring in a professional who knows how to work with assists and is going to consider all those potential options.
Okay. Thanks, Dan. All right. We have another good one here. Somebody wants to know what we meant when we said the term related party. That's a good question. So, Dan, can you explain what a related party is and why it would affect the price of goods?
Sure. So, in essence, a related party can be loosely defined as an organization, two organizations that share either something like revenue, or you have officers that are on both boards, that there's some form of relationship, for lack of a better word, as opposed to, or for example, if Allyn decided that we were going to ship something or manufacture items and ship them to our office in Prague, then that's a related party because they're under the same umbrella, they're all similar. If we were going to ship it to some other company, then it wouldn't be a related party.
Yeah, like the most common ones, like a subsidiary to their owner,
Absolutely.
or between two subsidiaries that are owned by the same owner.
Sure, exactly.
And I think this person was looking for a little bit of information on why that relationship would affect the price potentially. So
potentially you're not going to charge them for your profit, or depending on how things are organized, you might have a pass-through structure where you're almost not even charging them for it. But like we keep saying for valuation, the goods have a value regardless of what you're paying for them, and that's what customs is concerned with.
Okay. Thanks, Dan.
Sure.
All right, Michael, this one looks to be up your alley. On the first import slide, you mentioned some atypical shipments. that you might be able to save on. And this individual wanted you to go into a bit more detail. I guess, what some of those atypical shipments might be.
Yeah, like the things that you wouldn't immediately think of like as an import, right?
Right.
So like in that slide, I think we mentioned a couple things like workman's tools.
Yep.
Or goods returned for warranty, stuff like that. These are very non-standard, like your standard international transaction is a seller selling to a buyer, and the buyer is the import. But sometimes things become more complicated because international business is complicated. But in all those situations, as Dan has said like 3 times now, customs wants the actual value of the goods. The transaction value is the best idea of that, but if it's a different sort of transaction, they have methods to where they want you to actually value the goods the way they are. And the things I listed off in that slide, they have special provisions attached to them to where you don't have to pay duty on them. And there's things like goods returned for warranty, you don't have to pay duty on that. Goods returned after improved abroad, you only have to pay duty on the actual improvements that were made. And workman's tools, you can generally get a temporary import bond open so that you can get it out and you never actually had to pay duty because it's not going to permanently stay in the country.
And Michael, there's one that I read about that happens very rarely, but depending on your situation, if you leave the country for work and you're coming back and say you're bringing your furniture with you, then depending on how that situation plays out, that can be considered an import.
Yeah, sure. It's a personal exception, but you still have to import it and you still have to say why you don't have to pay duty.
Thanks, Michael and Dan, for answering that one. This one is a good question to follow up on that. Can one of you guys go into detail on why we can't use transaction value on some shipments? Like we had said that transaction value is the preferred method, but why wouldn't, aside from the relationship, let's say it's a subsidiary and they have no markups or way of relating the transaction value, what would be some other examples of when we wouldn't be able to use it?
Sure. Valuation has been kind of a recurring theme, and that's not really surprising because it's probably one of the most complicated things in customs. There's whole huge documents dedicated to it and how you're supposed to properly do it. But the idea is that customs wants you to pay duties on the value of the freight. And the best way to do that for a normal sale is the sale value because that's the free market value of the goods. But if there's a bunch of other situations such as transferring items or returning things that you already own where there's not going to be a sale value. And basically customs has a bunch of different things in place and they want you to pay duty on the actual goods. They don't really care quite as much with the relation or like the external circumstances surrounding it. So
I think one that's missed a lot can be like discounts.
Yeah.
So maybe you get a deal if you buy 50, they're going to give you 5 for free. Well, those 5 still have value when you're importing it for customs. You're paying for 55, not 50.
And you would have to even it out over all of them, basically. So
I have another question here, and this is a good one. We mentioned the broker parts list. This individual is interested in what we would recommend being added to that list when we send it to the broker.
Sure, that's a good idea. Definitely we recommend using that parts list. At a minimum, you want to have a part number or whatever you use to identify your goods, an adequate customs description, and the Harmonized Tariff Schedule Code. That's going to give your brokers the quickest reference. Really valuable in addition to that, if you single source, get the country of origin. If you know whether or not you have a free trade program applicable, you can list that. So the list can get really long depending on your situation, but I'd say at least those 3 or 4 items.
Yeah, and it's also important to have like a reportable quantity, like per unit.
Sure.
You need to have weight for steel products, or you need to have area for textile products. That stuff's really good to have on a list where the broker has it available.
Make sure if you're going to put that, you're putting the per unit or per however you're going to report it on your documentation, so there's no confusion when if the broker has to calculate it out.
Okay. Thanks, guys. Those are the questions that we are going to take for the day. We're going to start to wrap up. However, before we end, I wanted to touch base on 2 housekeeping points that I had made mention of when I jumped back on the line. The first is for the questions that we are not able to get to today. I will be following up with an email and an answer. We will commit to that. We will get to all questions. And for our attendees that may think of questions later or may want more information on our services, it could be for trade services or it could be for tax or transportation or logistics. Please note that my contact information is on the slide. You can feel free to reach out to me directly. If it's not about trade compliance services, and your question might be best answered by one of my colleagues, I will commit to getting you to the right individual. I'd also ask you to go ahead and please check out our website at allynintel.com. There's lots of good information on there. And the second piece of housekeeping is we will be sending out a brief survey that we'd like you to fill out and let us know how we did today and if the topics were interesting and what topics you'd like to see moving forward. So if you could please do us a favor and take a few moments and fill that out, we do appreciate it. So with that, we're going to close and seems like we're going to let you off a little early today. And so again, we want to thank you all for taking the time to attend our webinar, and we hope you enjoy the rest of your day. Thanks, everyone.
Thank you.
Thank you.